Well, good morning. Welcome again to the Rick Elts Real Estate Show. We try to make sense of this crazy Arizona real estate market, and we get you up to date on all the facts and figures on what's going on. So not only will you be educated, you'll be a hit at all the cocktail parties, and that's important. So you'll hear somebody ask a question about real estate, you'll be right there. So I'm going to talk today a little bit about, good morning, Jackie. Good to see you again. About leading indicators and lagging indicators. What do we want to look at? What do we pay attention to? Because I'm seeing a little bit of nonsense. You usually do, but one of them's from one of our favorite YouTubers put out a newsletter. Was forwarded to me by one of our subscribers on price changes and the fact that price changes are an indication, price cuts, an indication that prices are about to come down. They're not. Price cuts are a signal that they already came down. It's not a leading indicator. And I'll show you on the chart here what I mean. So the statement was made that we had 30% of our market had price cuts. And that, or actually was 17%, but it's about to be 30%. Hold on to your seat. Here they come. And here's price cuts per week. Now the pink part here is Friday. That's when most price cuts happen, before the weekend. And then the gray one is Saturday. But you can see that we hit a peak here in October of price cuts, because you'll remember that we had the huge raise in interest rates in March. And I'll show you another chart where you can see where that happened. And people said, holy cow, we got to get our equity while we can, because we know where this is going. Let's put the house on the market, and because I know it's worth $600,000. Let's go. And they put it out there. Well, guess what? The buyers are sitting on their hands because rates were high. So they did two things. They either reduced the price or they pulled it off the market. And and Mac here says, we went from cold spring to middle of summer in 1 week. I think we did it in 1 day. Yesterday was 97. It's like, holy cow. But if you look here, when we hit that peak, this is also for in 2022, when we had our peak in active listings. We hit about 20,000. You may recall that when we were trying to predict things, and I was saying, when do we think things are going to turn? And I said, well, if you see that our listings all of a sudden start to blow past 17,000, I think that's your indicator that you should list right away. Because if it gets up 20,000, we're going to see prices level off or start to come down. I didn't know where interest rates were going to head at the time. And that's actually a prediction I actually got right, because when we got up to 20,000, look what happened. Here's the interesting kicker on this, though. We're talking about percentage of price cuts. Now, you look at this chart here, see how the price cuts are through the stratosphere here, and now they're not. It's still 22%. So you have these price cuts here that are above 4,000 divided by 20,000, 22%. Down here, we've got about, less than about 1,700 price cuts on a weekly basis, and we have 13,500 listings, 22%. Now, just because prices were cut up here, does that mean that prices are going to come down? Because that was a leading indicator, according to this gentleman. Prices are on their way down. Well, let me move over to this one. October, let's see, October's here, right? Okay, so the price cuts came, and prices went down in January only because of the hike in interest rates. But since then, we've had a steady upward decline. So it wasn't so much of a leading indicator of the future as he stated it was. Now, price cuts can mean a lot of things. It's an effort for buyers to say, well, I'm going to try and get this amount. And it didn't work. So I don't think I'm going to either leave it on the market or I'm going to pull the price off. It doesn't tell you anything about where the future is. Now we got somebody watching from Norway. Gosh, the past 2 weeks we've had Albania, Saudi Arabia, Estonia. So I think you guys are all over the place. Great, welcome. What time is it over there? So looking at our average price per square foot, they do make the comment here on the Cranford report that says, let me add this back here again. And they say, although the dip between November and January was a bit scary, the recovery in price has been equally strong since then. Volume is well below normal. with both sellers and buyers lacking enthusiasm. Isn't that true? But prices are buoyant and even better shape than we expected. With the Cranford Market Index still showing higher, our expectation is that prices will edge higher in the next few months. I'm going to show you why they say that. I would not have strong expectations for the third quarter because we almost always see a 3Q dip every year. It's due to seasonal effect on the luxury market. Unless we get an unexpected source of new supply, the fourth quarter should show a rebound from that dip, meaning that annual appreciation will have turned positive again by November. So what happens? It's 5:30 p.m. out there in Norway. How about that? My son went to Norway. He was in this band called Peach Cake. They went out and performed there. It's a long story, folks. So they're saying that in Q3, our average sales prices slow down a bit because of the drop in luxury. Nobody comes out here and looks at luxury homes when it's 114. Can't blame them. Let's take a look at probably one of our best leading indicators here, which we use as a Cranford Market Index. And you really need to look at a lot of different data points and sources. And this one here is showing that, let's go back a little bit. And I want to go back to February right here when it started to turn. The interest rate hike happened right here. And that's when things went south, right? Well, why did it turn here? Well, we reached an affordability ceiling. And some may say we're still there right now. But we reached an affordability ceiling and things started to turn. That was a leading indicator. When interest rates went up, that just added gasoline to the fire. And down, down, down we went. Now, we can't pay any attention to this because this was stay home 2 weeks, flatten the curve. That's what that's all about. Had we not done that, the projection was that we would continue to do this, and it did. Housing went up. Now, during this period right here, stimulus checks were going like crazy. Rates were cut to zero. There was all this stimulus going on, and it got very frenzied. But now you can see that we are again going up from 100 to almost 140. Not as steep as years past, but almost equally as steep as what we saw before they told us to stay home. See that? Comparing these two lines right here. So the projection is up. This is a leading indicator. It's a measurement of supply and demand. And as long as we see that and we see it going up, we can anticipate that in the next few weeks that house prices will again trend higher. Sometimes it starts to turn again while prices are still going up. But as it starts to turn, that's an indication that prices will become lower. And it's all about inventory. And there just isn't anything out there now. What do we have down the bottom here? 13,319. But remember, back in the frenzied time, we were looking at housing inventory of 5,000. So it's triple that, right? Everybody's like, listings are up 150%. Yes, I wish they were up 500%. But interest rates right now are seeing an increase today as they anticipate the Fed, the CPI data coming out tomorrow. And they're anticipating that the CPI data is not going to be a huge improvement. So if it's anywhere near that projected range of about 5.8 to 6.1, the markets are baking that in the cake right now. And you can see that we're headed negatively. And so rates have gone up a little bit to 6.50 today as the traders are saying, well, we're not expecting good news on the CPI tomorrow. We're expecting some improvement, but we don't think it's going to be enough to affect the bond market. So that's what you're seeing now. So tomorrow morning, all eyes will be on that. Will that be a leading indicator? In the short term, yes. Yeah, if we all of a sudden spike up, let's say that the CPI data comes out tomorrow and it took a turn and started going up. Well, this bond market's going to go crazy, and there go your interest rates. But it doesn't look like that's going to happen. But there are greater minds than me that look at that. And it said, why March's CPI report could upset the stock market and seal the deal for the next rate. And what they're saying here, the odds of a Fed rate hike have increased to 70% from around the 50% before Friday. So 50% of the people surveyed said, I think they're going to go up. Now the 70% are going, I think they're going to go up. And that was before Friday's jobs report, adding that unless there's a significant miss on the CPI, the Fed will boost its policy rate above 5% because inflation remains too high. So here's what they're looking at. Core CPI, come on, cooperate with me, Mouse, which strips out volatile food and fuel costs. And the reason they take that out is the Fed can't do anything about food and fuel. So they don't, they look at it, but they don't really look at it. Is expected to rise 0.4 from a month ago or 5.6 year over year. The increase in the core rate over a 12-month period dipped to 5.5 in February. So those are the numbers. They're expecting us to be 5.6 year over year. So, or less. So let's see what happens tomorrow. If this comes in at 6, rates are going to have a fit. There's no doubt about that. And so there's a market cycle here at the Cranford people talk about. And where are we in that market cycle? And this is showing us right here that we are in the skepticism phase. And after that is hope, relief, optimism, and enthusiasm. You've seen it before. This is where we were coming up before that. Now we had unease, denial. No, prices aren't going down. I'm not feeling good about this market at all. This is terrible. Oh my gosh. Hurry up, honey. Sell the house. List it. Panic. Capitulation. I don't know. I don't know whether it's going up or going down. Oh, this is looking bad. This is awful. Now it's like, well, the numbers are coming up, but I'm not so sure I believe them. That's where we're at today. So it's an interesting chart to look at. Does it hold water all the time? Well, I don't know. It's you see it in everything. You see it in stocks. You see it in trading EFTs. Oh, everybody's going to be buying EFTs. We're going to have digital real estate. There was just too much money floating around. People were throwing money at everything. So you thinking of selling your house? Here's some advice from, let me take a look here. The 7 habits of highly effective home sellers today. I'm hitting the wrong button here. Let me find it. There it is. They make sure their house is in good condition. This is probably, I'm going to say this is number 1. People are not buying junk now. And you got to make sure it's good and do everything you can. And you've probably heard me talk, do the little things. Are your outlet covers kind of dingy? Light switch covers kind of dingy? You know, what are they? 49 cents a piece? Replace them. Make your home shine. People walk in the door and they immediately get an impression. They get their first impression on the photos. So make sure you've got good listing photos. No cell phone photos. That's a sign of a cheap real estate agent. And I don't care. They say, well, my phone's really good. Okay, knock yourself out. They're realistic with their list price. This is probably the hardest part in this market. Where do we list? Be realistic. Don't be overly optimistic. Now, if you miss the mark and you come in too low, the market is active enough to where they'll bid you up. So, just be realistic. When you sit down with your agent and look at the comps, where do you fall in this range? Don't list because that realtor came in and said you can get 6.25 and the other one said 600. He doesn't know any more than the guy that said 600. They're still just looking at data and saying, here's what I think is going to happen. So you got to be realistic about the prices. So you can always adjust it, but you get the most eyeballs on your listing in the first 7 days. After that, it drops off. So they focus on curb appeal. Make sure your front yard looks good. I've seen some that are just dirt and weeds. The inside of the house looks great, but you're already going, ugh, when you're walking up. Okay. They accommodate showings. This seems like a no-brainer, but actually it's very hard for some people. I have a dog. Give me 2 hours notice. Hurry up when you come in. Don't let the cat out. You got to find a solution for that stuff. If you're showing your home, I went into one once a few years ago, and they had a dog that was in a cage in the kitchen. And this dog was so loud and it was not friendly. I'm glad it was in a cage, that when we wanted to talk about the house, we had to go in the back bedroom and close the door because we couldn't even talk inside the house. It was so loud. And the whole showing was just a turnoff. The house looked great, but we actually hated it. They're transparent and honest. Over the past few years, sellers have not had to worry about buyers asking too many questions about the condition of their home. Those days are over. That's the truth. Okay. The market has slowed down enough to allow buyers to be more thorough in looking for deficits, leaving sellers a choice of whether or not to be upfront in the transaction. Go ahead and tell them, well, yeah, we had to fix this, we had to fix that. That door squeaking. I had one, I think I told you they were upset because the door would not stay open in one of the bedrooms. Like, get a shoe. But they're willing to compromise. Don't be so married to your price and to your terms that you're not going to budge. Give and take a little bit. Most of you have a lot of equity out there right now. You can afford it. They choose their real estate agent with care. During the red hot market the past 2 years, homes were selling so fast and furious that just about any real estate agent was guaranteed a sale. That was true. All you had to do was step out your front door and just whisper for sale, and you get an offer. So you put it on the MLS. You could even use cell phone pictures, and voila, the house sold because there weren't enough of them out there. Now, they better step up the game. As the market cools off, selling might become a harder road, and that's why you should make more of an effort to find the very best real estate agent for your circumstances to help you stack the odds in your favor. Successful sellers hire real estate agent and follow their advice, said this broker in Lubbock. The advice could cover a myriad of things such as how to best prep the home, etc., yada, yada, yada. Now, we've had a real world example of that, of a listing that we've had coming up. I want to commend Jackie for this. She did a really nice presentation and coming soon. It wasn't listed because they weren't done painting, but we got an excellent photo of the front of the house and said, this is going to be coming on the market in about a week and a half. And we started getting all this attention on the house, and lo and behold, it's under contract, and the photos aren't out until today. So you just never know, but it was a strategy. It was a strategy that says, let's put it on coming soon and see what happens and get people talking and asking about it. There's nothing evil or distorting about that. It's just the fact that, you're not done painting yet. So when you're done painting, the photographer will come in, boom, we'll list the house and see what's going on. Now, new home builds. I'll talk about this one for just a second. It's saying here that spring is in the air. Home builders unveil new communities across Metro Phoenix. In what feels like pre-COVID spring selling season, home builders are unveiling models across Metro Phoenix. Home buyer activity is picking up, and they're saying here that since then rates have been hovering around 7%. No, they're not. They're actually hovering in the high fives. When we turn the corner from 22 to 23, it's like the market just reignited, said James Atwood, Arizona division of TriPoint Homes. February and March have both been very strong for our company, and I feel like it's a return to normality. Where have we heard that before? So the home builders are optimistic now, and they're optimistic because they're not seeing new listings come on the market. I'm not seeing it in my 7-day moving average. I'm not seeing it in the Cranford report. We're just not seeing active listings showing up. In fact, if I look here, we'll take a peek at where we're at today and show you that we're down to the same levels that we saw, again, going back to the year 2020. And again, why did we have this big dip right here? Well, that's because sales dropped off like a rock. You couldn't even do an open house back then. Remember that? There were some brokers that wouldn't even let you hold an open house, even if you wanted to. They didn't want to take the liability. There was a lot of fear back then. But now, for builders, there's a lot of optimism. So they're not overbuilding. They were very cautious. In fact, if anything, they're a little bit behind. So they've kind of pulled back a little bit in their permits, but they're starting to ramp them up just a hair. Sean here says, is the rate of change increasing? Which changes that you're referring to, Sean? I may be a little confused on that one. The Cranford Market Index, like I said earlier, is showing that, looks like it's going to be a pretty good spring. I personally believe that May and June are going to be very, very good times for sellers. We don't slow down home inventory. No, I'm not seeing it, Sean. I'm just not seeing it coming on. We're going to there has to be some kind of catalyst for that inventory number to change. I mean, you can see right here, it's trending down. There has to be something that makes it pop up. And that could be a spike in interest rates where the odds makers are saying that is in the rearview mirror now. There has to be some type of economic hit to us that hits us very hard, high unemployment, if there's a hard recession that's coming, that'll spur more inventory. But that remains to be seen. So in the short term right now, between now and I think July, I don't see inventory climbing. I really don't. I see it kind of muddling around where we're at. June is still strong here in Phoenix. I know it's just hotter than heck, but a lot of schools start at the end of July, and people like to get that out of the way. So I realize having good credit score only attract lender to trust you, but not guarantee a better interest rate. Well, your credit score does affect the rate you can get if it's shopped over several lenders. Like if you go through a broker, your higher credit score will get you a better rate. I can't wait to vote for Joe Biden again. Just kidding. Yeah, we don't touch that on here. Sometimes we want to. Wow, such good analysis. Make a risk posture on buying. It's risk is only short term, and I agree with you, Sean. Risk in real estate is short term. Now, if you're looking at long term indicators, and you can clearly see that you're at a peak, like we did back in 2007, that was obnoxious. Every indicator showed you that it was time to get out, and people didn't. They kept buying. You bought then. You had a tough 15 years. You really did. And people that had to move in 5, it was terrible for them. Now I'm looking and going, well, those people that bought at the peak in 2022 came in at interest rates that were 2.75 to 3. They're not sweating bullets. They're sitting there with that nice payment going, honestly, I don't care what happens to my equity. I love this payment. I like it being lower than what my rent was. Now, there was also a comment yesterday by our same gentleman that said that rent and house prices are going to have, it was a double-barreled crash. Rent prices are going to crash. Real estate prices are going to crash. Rent prices are going to go down because we have more available inventory coming on. Just go around, look at how many are being built. But newsflash, people are still moving here. Jobs are still being created. Rentals are getting their tenants. So a crash, no, we're sitting at about between 6% and I think it's 7% occupancy rate for rentals. So I don't see that spiking too much. If I look at our rent prices going on now, you can see that they have come down a little bit from a peak of $1.40 per square foot to $1.32. So 8 cents, that ain't enough to take to the bank. So we have a question here. Sean says, yeah, the crashers got to love them with no data. Yeah, show me the data. Look, if you think things are going to go down, tell me why. Tell me the catalyst for how inventory will show up. I'm all ears. If I see indicators that show that real estate's going to be in bad shape, I'm going to tell you. I just haven't seen it yet, but I'm looking for it. I'm skeptical by nature. When we first had, and I'm going to talk about that in just a second. Casinos breaking ground over at the Northern Zoo. Will that affect local housing market, negative or positive way? I don't think it'll affect anything. It depends on who they employ. If they employ people outside of the reservation, if that's a reservation casino, I think it's not going to be neither good nor bad. But I was talking about being skeptical when things first started turning, when they told us to stay home, and I looked at where the numbers were going. I didn't see helicopter money being dropped by the federal government, mailing us checks. There was nothing out there that said that real estate was going to be good. And as a real estate agent, we get emails and newsletters from title agencies and from lenders. The title agencies are the worst. They're great people. They've got people called title reps. Their job is to help you with your marketing, help you with your flyers, really give you a lot of resources so that you will use and recommend their title agency. But sometimes, to me, they're just a little bit over the top. I've never had a title rep say, looks like it's going to be a bad year. They always tell you, well, here's what I would tell your buyers. Here's what I would tell your sellers. They're spin doctors. Sorry, if you're a title rep, I'm beating you up a little bit. That's your job. I get it. Keep real estate agents from being depressed. But I'm skeptical. So when that was happening, I'm getting all this stuff. I'm going, no, I don't believe that. I don't think that's going to happen. And sure enough, the market started turning down But then when the money started getting pumped out there, it changed the whole dynamic in the market. That's what's difficult about the situation that we're in right now, folks. If we've never been here, when we look at historical data for real estate, we have never come out of a phase where this much money was pumped into the market on both ends, both with the Treasury and the central bank. Now you're in a situation where the central bank is pulling back and the Treasury is spending money like a drunken sailor. So they're not working in sync. So we really don't know what's going to happen. We're kicking a lot of cans down the road. I think the debt bomb has been lit. I don't know how long the fuse is. It could go along like this another 5 years before things get ugly. Somehow, maybe there'll be some kind of miracle. We'll have a soft landing. I don't know, but I'm skeptical, and I look for that stuff. But when I look at the short-term indicators and midterm indicators that we have now, April, May, and June are going to be good for sellers, and they're not going to be a knockdown drag out for buyers. You will bump into a few bidding wars, but you're not going to have to give up the inspection. You're not going to have to waive the appraisal. You're not going to have to do all that stupid stuff that was required of you in 2021. So that's where I think the market's going. I will be on. Hopefully tomorrow morning we can talk about, what did they do with rates? Until then, have a great day. Thanks for watching. Hey, there's a link down below to subscribe to my newsletter. It comes out every Monday morning, 7 o'clock. Give it a shot. Thanks. Take care.